In a dramatic shift threatening America's financial dominance, BRICS nations are mounting an unprecedented challenge to the US dollar's global supremacy, prompting former President Trump to issue warnings of potential 100% tariffs on their goods. The story begins in 1944 when the Bretton Woods Agreement established the US dollar as the world's reserve currency. For nearly 8 decades, this system has given America unprecedented economic power. Now, a seismic change is underway. The BRICS alliance, Brazil, Russia, India, China, and South Africa, is creating an alternative financial system that could reshape global economics. Their move to settle trade in local currencies challenges Washington's financial control. Under Brazil's President Lula's leadership, BRICS has issued a 2025 statement emphasizing financial independence. The alliance is strengthening its new development bank, funding projects in local currencies and reducing reliance on Western institutions. This isn't just about economics, says analyst James Morrison. It's about sovereignty and nations controlling their economic destiny. China, Russia, and India have begun implementing bilateral trade agreements using local currencies. This reduces their exposure to US dollar fluctuations and sanctions. Russia has accelerated its de-dollarization efforts following economic pressures. The US response has been severe. Trump's threat of 100% tariffs signals Washington's determination to maintain financial supremacy. However, BRICS appears undeterred, viewing this as an opportunity to break free from US economic control. President Lula argues that the dollar-dominated system unfairly benefits developed nations while leaving developing countries vulnerable. His vision involves creating a more equitable system where developing nations can make independent decisions. As this financial battle intensifies, the global economy stands at a crossroads. The outcome could determine whether the world continues under a dollar-dominated system or transitions to a multipolar financial order. In a dramatic shift that's reshaping global finance, BRICS nations are launching an unprecedented challenge to America's economic dominance. Our top story today focuses on how these emerging powers are systematically dismantling the dollar's supremacy in international trade. Breaking news from the Middle East reveals that India and the UAE have struck a groundbreaking deal to conduct oil transactions in rupees instead of dollars. This historic agreement signals a seismic shift in global trade dynamics, marking the first major crack in the dollar's monopoly over oil transactions. Former President Trump has responded by threatening to impose 100% tariffs on BRICS nations' goods. Losing the dollar's dominance would be like losing a war, Trump declared. The BRICS alliance, comprising Brazil, Russia, India, China, and South Africa, isn't backing down. They're rapidly expanding their local currency trading networks, with China and Russia already settling trade in yuan and rubles. This move appears designed to shield these nations from US financial pressure tactics. This development could affect American households. The US has enjoyed an exorbitant privilege, the ability to print money without causing hyperinflation, thanks to global dollar demand. If BRICS succeeds in reducing dollar dependence, Americans could face higher borrowing costs and economic instability. Following Western sanctions, Russia has accelerated its push for alternative payment systems. China, facing trade disputes with Washington, has eagerly supported this initiative. For the US government, the stakes are high. The dollar's global status has enabled America to fund massive deficits through treasury bonds. Any shift away from the dollar could force painful economic adjustments. As this financial chess game unfolds, BRICS nations appear undeterred by Trump's tariff threats, suggesting this challenge to dollar dominance may be just beginning. In a bold challenge to former President Trump's recent tariff threats, BRICS nations are showing remarkable resilience in their pursuit of financial independence. Despite Trump's warning of potential 100% tariffs on BRICS goods, the alliance remains committed to reshaping the global financial landscape. The confrontation highlights a pivotal moment in international economics, as BRICS nations continue their push toward reducing dependency on the US dollar. China, emerging as a formidable alternative to US economic dominance, offers trading partners opportunities that bypass dollar-based transactions. The global economy no longer revolves solely around Washington, explains Dr. James Morrison, international economics expert at Georgetown University. BRICS nations recognize this shift and are positioning themselves accordingly. The alliance's commitment to their 2025 financial sovereignty goals remains steadfast, though they may opt for a gradual approach to avoid immediate confrontation. This strategic patience could involve implementing changes in stages while minimizing potential backlash. Trump's tariff threats raise questions about their effectiveness in today's interconnected economy. We're not in the post-World War II era anymore, notes analyst Sarah Chen. The U.S. can't unilaterally control global finance as it once did. A potential trade war could impact both sides significantly. While BRICS nations maintain economic ties with the U.S., they're increasingly aware of the risks of over-reliance on the American financial system. This has accelerated their efforts to develop alternative financial mechanisms. The situation has broader implications for global trade. As more countries explore alternatives to dollar-based transactions, the U.S.'s ability to leverage its currency may diminish. This shift reflects a trend toward a multipolar economic world order, where emerging markets play an increasingly decisive role. This economic standoff could reshape international finance for decades, marking either a new era in global trade or heightened economic tensions between established and emerging powers. In a startling development reshaping the global financial landscape, former President Trump's threat of 100% tariffs on BRICS nations has sparked debate about economic sovereignty and dollar dominance. Our analysis focuses on why this aggressive stance might be flawed. BRICS nations aren't breaking international laws by choosing to trade in their own currencies. They're exercising their sovereign right to conduct commerce as they see fit. Why should Washington dictate the currency choices of independent nations? Economic experts note that BRICS' move toward de-dollarization isn't an attack on America, but a strategic decision to protect their economies. When the Federal Reserve adjusts interest rates, developing nations face economic turbulence. By reducing dollar dependency, these countries aim to shield themselves from external shocks. A compelling argument emerges when examining the U.S. position. While America prints trillions of dollars to fund its economy, it expects other nations to maintain faith in a potentially devaluing currency. This double standard becomes apparent as Washington resists other nations' attempts to protect their interests. The proposed tariffs contradict free market principles. If the dollar's dominance is as beneficial as claimed, why does it need government-backed threats? True market competition should allow currencies to rise or fall based on merits. These developments signal a shift toward a multipolar financial world. China's rise, BRICS' expansion, and diversifying trade markets indicate that no single nation can monopolize global finance anymore. Trump's threats appear to ignore this evolving reality, clinging to an outdated view of American financial supremacy. As our financial world transforms, the key question becomes, should nations face punishment for making independent economic choices? The evidence suggests that such coercive measures may ultimately accelerate the very changes they're meant to prevent. Welcome back, viewers and subscribers to our financial analysis channel. Today we're diving into a financial analysis exploring crucial aspects of modern economics and personal money management. As your trusted financial advisor and market analyst, I'm excited to share insights that could transform your approach to investing and wealth building. We'll be covering essential topics, including the current state of global markets, emerging investment opportunities in traditional and digital sectors, and strategies for building a resilient investment portfolio. We'll examine how recent economic developments, including inflation rates and central bank policies, are affecting investors and market prospects. For those new to our channel, we deliver clear, actionable financial advice combining theoretical knowledge and practical application. Whether you're a seasoned investor or just starting, today's content provides valuable insights for everyone. Before we begin, remember the importance of conducting research and consulting with a qualified financial advisor before making investment decisions. The information we share is educational and should be part of your broader financial learning journey. We'll explore various investment vehicles, from stocks and bonds to ESG investments and cryptocurrency markets. Our goal is to help you understand the risks and potential rewards of each option, enabling more informed decisions about your financial future. Throughout this session, we'll incorporate real-world examples, analyze current market trends, and discuss how global economic events impact investment strategies. We'll also address frequently asked questions from our community regarding portfolio diversification, risk management, and long-term wealth preservation strategies.